Shares of NIO are trading at $487 and they are still down 42% year to date. And zooming out on the chart, we can see why people are searching for this stock so much, given that it's still down over 92% from its all-time high in January of 2021. For my December 2026 price projection, they're expected to have a revenue of $13.4 billion, which makes their revenue per share $702, and their current price to sales is 1.1, but given this has leveled off recently, I think that we can expect it to actually be closer to 1.8 by 2026. So if we multiply that 1.8 by their projected 702 revenue per share, then that gives us a share price of $12.63, which is a 159% upside. And it looks like other analysts are pretty bullish as well, with the average one-year price forecast being $6.19, which is about 28% higher than where it trades today, with a high estimate of 10 and a low of 4. And in terms of fundamentals, they do not offer a dividend, and NIO has beat 2 of their last 4 earnings calls. And taking a look at their revenue and net income, their revenue does seem like it's bottomed out and is beginning to come back on track now, and it seems to be a similar story with their net income, although it's still quite low. NIO has a shareholder equity of $3.4 billion and a total debt of $2.9, which makes their debt to equity 85%, and they have about $5.3 billion in cash on hand. But as far as my thoughts go, I love the revenue, I love the net income growth prospects, and honestly, the valuation is great as well. But what I think is really holding the stock back at this point is really the spending that NIO's been doing in its infrastructure, which is great, yes, but when you combine that with the slowing EV sales figures across the board, I think that investors are pretty hesitant to put their money into some company that's been spending so much on EV infrastructure when the future of the industry itself is now a little less certain. That said, though, they're expected to grow a ton nonetheless, and despite stalling out a bit, their quarterly deliveries are actually still growing, unlike so many other EV companies right now. So for this reason, it's great growth and valuation. I rate NIO stock a buy, but do be warned because it's still a pretty risky play given the unproven EV market. Anyways, that's all I have for you today on NIO stock. Please drop a like, let me know which stocks you'd like me to cover next, and I will see you next video.